Great. So welcome you all once again to today's section. Today we are going to look at for the second stage of the capital reduction. We said that with a capital reduction, we need a scheme. Good. So for the purpose of your examination, we said that either the examiner will design a scheme for you by the company's directors, and you'll be asked to prepare the relevant extracts after the scheme has been what accepted, and we did that for the last time. Great. So that's what we look at it for the last time. 1A, where they will give you a scheme. So there is a given scheme of reconstruction. Today we are going to look at for where the scheme is not given to you and you have to design your own scheme. So we call it designing of what? Capital reduction scheme. Of capital reduction schemes. That is the topic for today. Designing the capital reduction scheme. So the last time we look at the where they already giving us the scheme. And that one we said we should only prepare the financial position right after the scheme has been accepted or implemented. And then we also prepare the capital reduction account. We also prepare the stated capital account, which is made up of what? The ordinary shares and that of the preference shares. We also prepare bank accounts. So take note that if you go to the exams and they've given you the scheme, then they will ask you to prepare this relevant extract. And don't forget, class the liquidation position when you go to liquidation. And that one was the assignment and it's still pending. Great. If I've not done that, kindly do so and let me have the solution. Great. Okay. So let's go straight to today's section. Today, the entire scheme will not be given to you. We have to draft our own scheme. How do you go by that? Drafting our own scheme. So that is the section for today. Designing of capital reduction scheme. So where they don't give us the scheme, how do we draft the scheme by ourselves? That is the section that we are going to look at for today. Good. So where they don't give us the scheme and they ask us to draft the scheme by ourselves, here there are 6 standard steps that it must be with you. 6 solid steps that must be with us. So that is it. Okay. So designing of capital reduction scheme. Designing of the capital reduction scheme. Let's look at the 6 steps. Designing of the capital reduction scheme. Let's look at the 6 steps. Then we are done. So to design a scheme, so designing I'm stepping now. Designing of capital reduction scheme. Here we have standard, 6 standard workings that you need to adhere. 6 standard workings that you have to go by. So step number 1, 2, 3, 4, 5 up to 6. Then you are done. So the steps that you have to go through. Let's go through those steps. Then we are done. So the step 1 will be first your statement of liquidation, to know the position of liquidation, the position of the company in event of what? Liquidation. So the first step is to prepare statement of what? Liquidation, to know the position of the company in event of what? Liquidation. So that's the first step. So statement of liquidation. Statement of liquidation. Liquidation. That's the first step. Thank God we know how to prepare a statement of liquidation. And that was the assignment. Good. Okay, great. Then step 2 or second, we need to determine here. We prepare the statement of liquidation to determine the total maximum loss upon liquidation. So we call it loss per liquidation, to know the loss per liquidation. That's the reason. Loss per liquidation. So if we should liquidate, what's the total loss? Oh, let's assume that the total loss is 1,500 Ghana cedis or dollars. So $1,500. If you should liquidate right now, the company, putting all the losses together, it will be 1,500. Step 2, determine the maximum loss. So determination of maximum loss. We call it maximum loss per reconstruction. Maximum loss, this loss is per the reconstruction. Maximum loss, this loss is per reconstruction. So this is where you determine whether you should go ahead with the reconstruction or you should what? You should cease operation. So take note. So let's assume that after the maximum loss, you had a maximum loss of 1,000. Then what will be the decision? Here, the maximum loss is talking about the total loss that we have to sacrifice, we have to clear, we have to cancel from the books, or we have to claim before we can be whole, or before we can revitalize or revive our business. Our business is failing and we don't want to lose business. So what will be the total loss we have to claim from the book so that we can revive the position? That total loss is 1,000 Ghana. Don't forget that a failing company or a struggling company have only 2 strategies. 1, shut down your business, liquidate immediately to avoid future future losses. 2, revitalize or reconstruct your capital base. So reconstruct your capital base. On what basis do you liquidate or do the reconstruction? You have to select the best option. So assuming that if you liquidate today, you are going to lose 1,500. But if you should clean certain losses from your books, from the balance sheets, oh, the entire loss that you have to clean is 1,000. Then make the decision. If the business belongs to you, You are the director or the manager. Which position are you going to select? Are you going to liquidate and incur 1,005, or you are going to do reconstruction or recapitalize or revive to get what? A loss of 1,000 Ghana. What will you do? Mhm. So here, if the examiner asks you, should the company go moves ahead with the liquidation, or should the company move ahead with the reconstruction? It based on the loss that they are getting. So here, I will tell the examiner they should reconstruct because the loss per reconstruction is minimal. It's cheaper to reconstruct than to liquidate. It is what? Cheaper because you are incurring loss of 1,000 Ghana cedis. It's far, far better than loss of what? 1,005. So whether to continue with the capital reduction scheme, it depends on this step, these two steps. Please, these two steps, any of them can come first. It doesn't matter which one is first. What matters is the first two steps must be these guys. First, know your position when you go on liquidation. Will things look nice if you go on liquidation? If you compare the position upon liquidation to that of position upon what? The reconstruction, compare the losses, you are done. So that is the first two steps. So if the loss per reconstruction is cheaper, it's far, far better. Oh, they should go ahead with the what? With the reconstruction. Then you go to the next step. Step number 3. Step number 3. Then this maximum loss that you have determined, you have to share. Oh, yes, now we said that reconstruction is cheaper. And we've determined that if you do the reconstruction, the revival, if you reconstruct the business, the total loss that will incur is what? 1,000 Ghana, which is far, far cheaper than to liquidate the entire business. Because liquidation is not a present situation. Oh. Imagine you suffering with your business, like started running your business small, small, and now it has expanded. And all of a sudden, something from nowhere start pop up to liquidate your entity or your business for you, something that like your lifetime saving, and just few days you're going to lose everything. It's not a present situation. Liquidation is not a present situation. So that is it. You opt for liquidation if the need arise, and you have to compare these two positions. Good. So we are saying that to design a reconstruction or capital reduction scheme, there are 6 standard steps that you have to go through. Step 1, determine the state when you go on liquidation. That's the statement of liquidation. Step 2, determine the maximum loss. That's the total loss if the company should what? Reconstruct or revive. And then we give example that if the liquidation is 1,005, the loss, maximum loss is 1,000, you probably opt for reconstruction. The next step is share of maximum loss. Share of what? Of maximum loss. Now, this loss that you determine, you have to share it to the stakeholders, the key stakeholders. Share it to them. And you, this shareholder, please absorb this amount. Creditor, we are owing you 1,000. We will pay you 500. We clear some off. Share the loss. But please, the sharing, we have the principle that guides the sharing of the maximum loss. That is it. So the maximum loss that we determine at the step 2 must be shared. So the maximum loss must be shared in the step 2. Great. So the maximum loss must be shared in the step 2. Okay. maximum loss determined in step 2 must be shared in the step 3. Let's go to the step 4 and then let's finish it quick. Step 4 will be the resource requirement or capital injection. Resource requirements. Resource requirements. Resources requirements. Requirement. You guys are struggling. In fact, you are making consistent losses. Sometimes our cash balance is negative. We have a lot of liability to be paid off. So, in reconstructing the capital base, we need some funds to pay off the debt that are overdue. So we need some money, some resources. And sometimes too, we can ask any of the shareholders or any of the equity holders to bring some money. So the resource requirement basically talks about payments and receipts. That's all, basically. Receipt and payment. That's all. Are you going to get some money from the stakeholders? What are the money that we are going to receive from the stakeholders? Let's bring them in. Do we have any payment? Some of the liabilities, they have overdue. So we have to settle them because we are reviving our business. We shouldn't put any bad picture in a new business, in a revived business. So if there's any liability which in which we have to settle, oh, then we have to pay it before we can say that we have revived our position. So where do you get the money from? We are struggling. So now we have to now write to the key stakeholders that they should at least contribute little funds to us. So they'll do little contribution. We take the money to settle those that we have to settle. The remaining one, we use it for next production. So that's the step 4. Then you go to the step 5. Step 5. Step 5 basically talks about the proposed scheme. That's the scheme itself. You put from step A up to step 4 in writing. So proposed scheme, proposed scheme. That's the step 5, proposed scheme. Step 5 is proposed scheme. Proposed scheme. Then you go to step 6, the last one. We call it resultant statement of financial position. Resultant. Resultant statement of financial position. Just after the scheme has been what? Implemented. Just after the scheme has been implemented. That's all. That is all. So that's the 6 standard steps that you need to go through before you can design a scheme for capital reduction or capital reconstruction. Then you are done. So that is the steps. So the last one, take notes, we call it resultant. So the result of the scheme. How would the financial position look like? So that's why we call it resultant statement of financial position. So resultant statement of financial position. Then you are done. That is it. Okay. So we are done with the steps. That is all. All what we have to do is we have to pick a very nice question and do justice to it. So I'll pick a very nice question, then we go through it. After that, that's the end of capital reduction. If you're able to go through all these 6 steps, we are done with capital reduction, basically. Okay. So we are going to pick a question Now we call it the Asempa Limited. A question in a handout called Asempa Limited. So that is the question that we are going to look out for. Asempa Limited. So let's see Asempa Limited. We are going to use the Asempa Limited. Good. Asempa Limited. Asempa Limited. Where are you? Where are you? Where are you? Where are you? Asempa Limited. Please, this assignment is still pending. The number C, this one is still pending. So I've received from only 2 people. Great. So if I've not done that, kindly let me have the on. Okay, so Asempa Limited is here, and then the steps 2 are in here. So I'm going to use Asempa Limited to do justice to this, and we are done. Great. As usual, I'll go straight to the requirements to avoid deviation, to be sure whether it's a capital addition question. Now, A, advise the preference and ordinary shareholders of their position in case of liquidation, 5 solid marks. I want to change some of the requirements. I'll add more to it. I will design a scheme of reorganization that will be acceptable to the major stakeholders. Once the examiner said design the scheme, whether the reconstruction is cheaper or not, you have to design the scheme. Yes, prepare a statement of financial position immediately after the reorganization. So once we said we should design a scheme, then whether the reconstruction is cheaper or not, we have to design a scheme. We will not end at liquidation and say that liquidation is cheaper. No. So let's go. When I ask you to advise the preference and the ordinary shareholders of their position in case of liquidation, once I see liquidation in here, they are just asking for the position of the stakeholders in event of liquidation, which we have to prepare what you call the statement of what? Liquidation. Which we have to prepare a statement of liquidation. So let's go straight and prepare the statement of liquidation. So right after the requirement, I'll set the tone. Please, I'll prepare the statement one after the other because we have a very small board today. Very small board today. So I'll do them step by step. So only one step at a time. Yes, only one step at a time. So first, wish can extend the lines more so that I have a bigger space. First, okay. So right after the requirement, you set the tone for the solution. So first, statement of liquidation. So what's the name of the company? Asempa Limited. They are right on top. Asempa Limited. So Asempa Limited. Underline it. I'll go to A. Tell them that I am preparing what? Statement of liquidation. So statement of liquidation. Please, no shortcut to this. My currency, one will be here maybe in thousands. Another one will be here in thousands. That is a currency. I know what goes into liquidation, right? So I write the proceeds. Go look for it in my question. Proceeds. So you say here, copy all the assets, one side, all the assets, copy them, just the name, then you are done. But for teaching purposes, I think I'll read everything. Just the top one before I start the game. So let's go to the top there. Asampa Limited was incorporated as a private company several years ago. Trading was very profitable until 2009 when the company began making losses due to influx of competitors and aging plants. Trouble there. Some of their plants are too old, giving them losses. Chai, what will be the recommendation? We are reviving the business. So if I should do recommendation, I'll tell them to go and change their plant, buy new plants. Where they get the money to buy the plant? Take money from shareholders. Let them contribute additional money. Change the plant because if the one give you the losses and you are going to revive, let them contribute so that you use the money to go and buy a new plant. Good. And machinery. The board of directors is considering whether to reorganize or liquidate the company. I like that. And I'll bring that requirement in the requirement for that particular one. Good. So here I will set my own different requirement to this question. Yes. A. So determine the position, determine the liquidation as you are doing. So these are requirement that probably I want. A is liquidation. B, do the maximum loss. Or state whether they should liquidate or reconstruct. So state whether they should liquidate or reconstruct. So that means in that case, you need the maximum loss so that you can compare with the liquidation and advise. Then before you go ahead, see, let's assume that the liquidation is cheaper. Then let's assume that the reconstruction rather is the cheaper one, or reconstruction is a bit okay than liquidation. So design the scheme. Now they are going to design the scheme for us. Then you will prepare the financial position immediately after the scheme. So that's how I want the solution. Or what I want to do is I want to find somewhere to chip in this requirement where you'll be asked that should the company liquidate or they should go ahead and design the scheme. In that case, you compare the maximum loss to the liquidation. We are done. Great. So take me and I'll do that. Let's continue the game, man. It's getting interesting. As a consultant, yes, you have been given the latest financial statement of the company as follows. Statement of financial position as of 31st December 2011 this year. Freehold property, plant and machinery, and motor vehicles, all of them are there. Deferred government expenditure is there. Inventories, account receivable, everything is there. Good. Okay. So let's see. Now let's go to the board. We said that to prepare the statement of liquidation, you write a proceed and you write the name of the asset, all the assets with no figure. Yes. To avoid oversight, use the company's financial statement prepared. So here, let's write the names of the assets, all assets, including cash. There's cash, bring it. So yeah, write all the names. 1, 2, 3, 4, 5. So freehold property, plant and machinery, deferred development expenditure, inventories, and account receivable. All right, all their names here. So let's start writing their names. So freehold property, first on the list, freehold property, freehold property. The next one will be plant and machinery and motor vehicle. Plant, machinery, and motor vehicle. So call plant, plant, comma, machine and motor vehicle. We are just writing their names, all of them. Deferred development expenditure, inventory and account receivable. So deferred development expenditure, account receivable, then inventory. No, inventory comes before account receivable. But it doesn't matter which comes first, okay? So inventory and then account receivable. That is all. If there's cash, please bring cash. As usual, if there's cash in the question, bring cash. The first question that we solved, there was cash. So we got cash. Good. For cash, you are allowed to pick what is on the financial position. What is there, the value. So take note. By this question, no cash. Let me take it off. Okay. Then what do you do next? Then you go to the footnote and go look for these items. Go to the footnote first. Look for the sale value. How much are they going to sell this? Net sale value. Net sale value. Or first sale. First sale value. It's also the same as what? Liquidated value. Number one. If it's not there, number two, select what? Net realizable value. This net sales or sales value is the same as what? Disposal. If you see disposal, it's the same thing. Net realizable value. If it's not there, then you select the recoverable amount. If recoverable amount is not there, then select the value in use. Value in use, and which is the same as, or it's in the same category with the fair value. They are done. So this is the order. Let this order be with you. We'll look at some of them. So let's go to the footnote. If you go to freehold property, just look for the for sale value or the NRV. Which one comes first? If this one is there, you come and pick NRV, you are wrong. Take note. If this one is there, you come and pick value use, you are wrong. Take note. It must be in this order. Okay. So let's go to the footnote together. We are going to together. I'll go straight to the footnote. Note one. The company's freehold The company's freehold was acquired on 31st January 2010. The directors believe that the net disposal value, I like that too, have you seen the term? The net disposal value of the freehold property will be 4 million. So immediately, I'm going to put it in 4 million. I write 4,000 because I've already raised 3 zeros. So to leave it what 4,000. I'll put it there. Then I move on to the next item. So the next item is plant, machinery, and motor vehicle. They should give me the figure. It is estimated that the breakup, another word for sale, is breakup. So for sale or liquidated or breakup. So let's add it to it. Or liquidated value. These 3 terms are the same. For sale, breakup, or liquidated value. Liquidated value. So take notes of that. Let's move on with the game. It is estimated that the breakup value of the plant, machine, and motor vehicle as of December 2011 will be 900,000. So here will be 900. Okay. Can I clean this one from there? If you have it, let me take it from there. So that solution will be very nice. The next item on the list will be the deferred government expenditure has been patented. Wow. And it is estimated that if the company is liquidated, it could be sold for 2 million. So you go there and put the 2 million there. So deferred government expenditure. In fact, if you arrange it well, the examiner will move in the same direction. But if you do look and pick, may end up leaving some out. Inventory and account receivable. Let's go and pick the disposal value. Inventories are estimated to realize their carrying amount in event of liquidation. So that means whatever the value is, they are going to sell it for their carrying amount. What's the carrying amount? Is the one that they have stated in the financial position. The inventory, the carrying amount is 2020. Wow. 2020. Let's continue the game. The inventory will be 2020. So 2020. Account receivable. What? You have to give us bad debts or provision for bad debts. Then we take it off. One of the major customers of the company has been declared bankrupt. Asampa Limited is likely to lose 100,000 of the amount due from that customer. Because so it means that of the bad debt is worth 100,000. That will affect the account receivable. That means you have to subtract 100,000 from the account receivable. So first, let's go and pick the account receivable. It's 760,000. So we have to subtract the 100,000 from it, right? Then we know how much we are going to receive. So first, account receivable is nothing by 760 less than 100. I'll get 660. Agreed. Perfect. So 660. Then you are done. 660. Then we are done with all. As soon as we get to this end, underline it. That's the total proceeds. You are done. Total proceeds. So kindly put them together and let me have the answer. Putting all this together, get 9,580. Perfect. So 9,580. Write it down. If you do have time, name it as the total proceeds. If you don't have time, leave it. Total proceeds. What we are looking for is the figure getting correct. If this figure is wrong and you write nicely, computer writing, it's wrong. That's the truth. Then tell the examiner that you are going to share this money. So distributed as follows. Distributed as what? As follows. So let's share. It will not go here. So I want to do it at the other side of the board. Yeah. Don't do it at the other side of the board. So currently, first, the first amount goes to liability with what? With fixed charge. So first I write here liability with fixed charge. Liability with what? Fixed charge. That's the first thing that I'll do. I'll tell the examiner that liability with fixed charge. Take note. I'll underline it and go to the question and search and search and search and search. Which of the liability carries a fixed charge? Which of the liabilities carry a fixed charge? Our first illustration that we did, we had a lot of the, so we have one, but we have a lot of the classifications. So take note. So this question, how do you know? Go to the financial position, check the face first, check all the liabilities and see whether it was stated there nicely. Kind liabilities, bank overdraft, floating charge. No, I'm not looking for floating charge now. 20% debentures secured on freehold property, which is what? 3,800. So secured on freehold property. So that's what? Fixed charge. So 20% debentures. So right here, 20% debentures. So 20% debentures. What do you do? Now take notes. There are two currencies, two columns. So that figure, we have to write it at the first column. So I have to make sure that I have the first column so that the board is too small. Either my handwriting is like, big, 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 big strategy, big, big, big. So that you write small now, then it will be plenty on the examiner's face. Well, there's no point to it. So 20% debenture. Let me write it too small here. So debentures. Good. Now, it was secured on freehold property. What is the debt? How much are we owing them? We are owing them what? 3,800 Ghana cedis. That's the amount that we owe. 3,800 cedis. That is the amount that we owe. By looking at this amount, we owe 3,008. It was secured on the freehold property. So check whether the freehold property, the amount that you derive from it will be enough to settle this liability. Oh, here they sold it for 4,000. So that means they can, in fact, even have more. They had more than what they have there. They have more. So what do you do? That means they had more than the 3,800. So what do we do? In fact, you have to record the 3,800 here at the first currency. Agreed as 3,800. 20% debentures. 3,800. Then the question is, where would the 200 go? But don't even ask, don't even worry yourself. That 200 is in the remainder. So you should not worry yourself at all. However, assuming that this one was sold for 3,000. Oh, then the money that we had from the sale of the collateral is not enough to pay for the loan of 3,800. Then for that instance, like our first example that we tried, if I'm not going to, please go through it. We got 3,000 because we had only 3,000. We cannot pay the 3,000 each. But here it's not like that. They had more than the liability. Have you seen? So if you look at the two positions, good. So if they had more than the liability, oh, then that means they can pay all the liabilities without any harm. So 3,890 like this, and that is it. I'm done. The next one goes to what? I normally call it what? Receivers what? Money. Liquidation expenses or cost of liquidation. So liquidation expenses or receivers money. Receivers money. Receiver must be paid. That one you get it from the footnote to not be on the balance sheet. So take note. That's the note. One. That's note 6, right? Great. So have you seen that we've not gone through all the footnotes, but I am or we are confidently solving the question. We've not gone through all the footnotes, but we are moving on. Yes. Like what you need, as soon as you get it, the rest, don't need to touch them. I'm begging you. What you need, as soon as you pick them, the rest, don't touch them. Good. So it's here, note 6. In event of Asempa Limited going into liquidation, it is estimated that liquidation cost will be 42,000. So if it will be 42,000, then we have to bring it as what? 42. 40, that is. Then we are moving on. Who is next to be paid according to the order? Next, preferential liability. Preferential liability, all right? Preferential liability. Preferential liability. We have preferential liability in the question. Examples of preferential liabilities, they are statutory owings, such as tax, senate, and other example like wages and salary. All of these are statutory owing. This question, did you see some of them? Let's see if you have something like that in this question. Asempa statutory owing. Let's go to number 7. Ordinary share capital. Ordinary shareholders are prepared to introduce the additional capital of 3,000 if they consider the proposed scheme to be satisfactory. The bank overdraft limit is 4 million. Okay, so I think there's no, let's go to the first P and C. Account payable 3,200 accruals is there. So there's no preferential liabilities. So I'll go back, put dash. Dash. Then move on to the next one. Liability with floating charges. So liability with what? Floating charge. So I'll go look for it from the question. I'm going for liability with floating charges. Where's liability with floating charges? Go to all the liability, check them. See there. Bank overdraft 2,100. 2,100. So bank overdraft. The figure is 2,100. Please, the first currency. That is 2,100. So I'll put it there. Now, the next is the unsecured. But before you go, make sure that you have enough funds for it. Make sure that you have enough funds. So before we go to the unsecured, let's sum all up. Sum all up so far. The amount that we have paid. So that we shift it here to get the amount left, the balance left, which is for unsecured liabilities. Balance left for unsecured liability. So kindly sum it up to this level for me. So this will give us 5,942 Ghana cedis. 5,942 Ghana cedis. So you get 5,942. I have written it, I think it's too far. So 5,942. Agreed. Then you underline it, put in brackets. You take it off from the figure on top, which is what 9580. Like its continuation. So how much left? So it's a balance left for unsecured. Balance left for unsecured liabilities. And that will be balance left for unsecured liabilities. So if I have a proceed of 9,580 and the secured liabilities are 5,942, what will be the balance left for them? So 3638. Great. 3638. 3638. So this is the balance left for the unsecured liabilities. So unsecured liabilities. The balance left. So all what you have to do is write here unsecured liability. Unsecured liabilities. So let's start again. Now with the unsecured liabilities, to be on surface side, just write the names and then write the amount somewhere to avoid cancellation. Take note to avoid cancellation. I like that. Okay. So it means that all the liabilities left so far. Let's go to the financial position again. All the liabilities left. All the liabilities left. We have what? Account payable. Account payable 3,200. We have accruals 600. That's all we are done. So let me choose. Is there any dividend in arrears? Let's go and check if you have dividend in arrears in the question. Dividend is in arrears. So let's see if you have dividend in arrears. Dividend in arrears. Dividend arrears is not a liability captured on the balance sheet. We do have dividend arrears here. Great. So basically, that is all. So there are two items here. We have to list them. Only two items left. Accruals and account payable. So 3,200 and 600, right? Perfect. So let's go and write account payable. Account payable. And I write here accruals. Now, if you put the amount together, it's 3,000. Please don't write this. Oh. Don't write. Don't write. 3,200. And here 600. That will give us 3,800. The money that we have here, the balance left, is not enough to pay this amount. So what do? You have to prorate it. Good. So if you realize that the balance is not enough, you have to prorate it. That's why I like this approach. That is why I like this approach. So take note. So if the balance is not enough to settle the liability left, oh, then it must be on pro rata basis, based on the amount that you owe. How we get it? So it means that the balance that left for them to share, we have to share them on basis of what we have. Exactly. So how do we then share the amount? Good. Let me clean just this top here. Okay, I'm making, let me clean small. So this something small here for the sharing. So for the sharing, their total will be, so account payable will take 3,200, accruals will take 600, putting all you get 3,800. So if you want to share, account payable will take 3,200. Sorry, that part wasn't coming in. All what I'm trying to say is this. If you put the 3,200 and then the accruals together, you get 3,800. So what you have to do is that you have to share this 3,638 with a proportion of 3,200 each towards 600 based on amount owing. So in event where the balance left is not enough to pay all this money, share the balance left among this using this the amount owed to them as a basis. Unlike the first question that we solved, that one there was enough balance, so we went ahead to pay them. Okay, so let's continue the game. So what to do is their total will give us what? 3,800, right? So I'll take it off. All what I'll do is now you can write. So I'll take 3,200 divided by 3,800 times the amount that I'm sharing. I'm sharing 3,638. I'm done. So that is the amount or the figure that the account payable will receive. Or if I should start the whole show again, to be like the account payable, they will take into brackets the 3,200 divided by 3,800 times 3,638. Good. That will be the value. And that will give us, and that is for the account payable. Great. To the nearest whole number. Yeah. So therefore, the account payable, they'll receive what? 3064. Let's go to the accruals. So accruals to accruals will receive the remainder. So then they will take 600 out of 3,800 times the amount that we are sharing. We are sharing the remaining balance. Great. And that will be 574. Perfect. So 5, 7, and 4. We are done. 574. We are done. Perfect. So that is it. You put all of them together. Sorry. You put all of them together. Then you push it here as 3,638. You take it off. The balance will be 0. And that's the end of the Okay. Okay. So that is it. Now to go over again, we said that when you go to the unsecured liability, always check first whether the amount left will be enough to pay the unsecured liabilities. There are only two here: account payable and accruals. Okay. So if you like to, you can go into your workings and bring it in. Account payables is 3,200. That is the value. In fact, you can't see it. Let me step in down. Account payable is 3,200. Accruals happen to be 600, which is 3,800. But the money that we have, 3,638, is not enough to pay all this money. So we have to do what? Prorate, share this money on basis of how much we owe you. So account payable, we owe them 3,200. So I'll pick that 3,200, divide it by this, then I'll multiply it by the 3,638, and that's what we have here. So 3,200 is what we owe, divided by the total debt that we have now, times the amount that we are sharing, and we have 3064. Great, and then you are done. If you like, you can just go and do workings and bring the answer in. Yes, do the working somewhere, bring the answer in. As simple as this. So that let's say, sorry, not simple. As 3064, then accruals. Everything we should workings. Accrual is 574. Agreed. Yes. How do you get these figures? Account payable. In fact, let me clean this here. Yeah. I'm cleaning here. I'm cleaning here. We are not going to use it again. So account payable will be, he will take 3,200 out of 3,800 times the amount left, 3,638. Whatever you get, you put it in. That's the 3064. Then you go to accruals. Accruals will take 600 out of, in fact, if there are only two, and the first one is 3064, just subtract it from the total and get the remaining balance, put it there. Good. So out of 3,800, now I can take this section off so that it will be nice. Out of 3,800 times 3,638. This will be for the accrual. This will be for the account payable. Then you put the answer in nicely. Then that's all. So if you do this one very well, you get the answer of 3064. If you do the accruals too well, 600 divided by 3,800 times 30,60,38. That also give us 574. You key them in and then you are done. Now sum all this one up. We are not done with the game. You sum it up, it give you the same answer as this, as 3638. Then you put it in brackets. You sum that one also up. What you get is, you call it available for ordinary and preference shareholders, these two people. Here is dash, 0. Then you go to preference shareholders, they also receive nothing, dash. This side, in fact, let me do it here. I want to continue from this section. So take note. I'm going to continue from this section. Continuation from here. So I'm assuming that this line, have you seen this very line? It's here, 3,638 is here. It's in brackets. So whatever remain, you are taking it off from this. That answer, we will call it available to preference and ordinary shareholders. Then you come here and write preference shareholders. How much are they receiving? Preference shareholders, they are receiving nothing. You take it off. Whatever remain, you give it to the ordinary shareholders. Dash, they are receiving nothing. Don't tell us that there's nothing. Yes, you're not going to do it, please. This is how we want it. I'm done with the statement of liquidation. Then you look at the position of each of the key stakeholders in event of what? Liquidation. The position of the key stakeholders. How do you do the position of the key stakeholders? The position of the key stakeholders. The position of the key stakeholders. Great. Position of the key stakeholders. So let's look at that workings too. So that is it. So position of the key stakeholders, that's the is still under the first part. So position of the key stakeholders in event of the liquidation. So right here, position of the key stakeholders, position of the key stakeholders. That is. So you write the stakeholder here, you write the position before, your position before, your position after, and a loss per liquidation. You are done. So that is it. Stakeholder, stakeholder here, your position before. These figures are coming from the balance sheet given to you, or the financial position given to you. Copy the figures, I'll submit them here. Position after is the one in liquidation, the liquidated figures. Good. Loss per liquidation, so loss per liquidation. You put it in loss per liquidation. Write all the key stakeholders here. Probably I will start with ordinary shareholders, preference shareholders. Please write it in full. Ordinary shareholders, preference shareholders. Then I'll go to all the liabilities. All the liabilities. So let's go to the financial position to avoid oversight. Let me go and look at liabilities again. All the liabilities. So 20% debentures, bank overdraft, account payable, accruals. So 20% debentures, then bank overdraft. Why can't you record their values there? Bank overdrafts, accounts payable, accruals, accruals. I'm right, accruals here. Accruals, and finally, preference dividend in arrears. Don't forget that one. Preference dividend in arrears. So let's go to the financial position and record these figures. Ordinary share and then preference share. Most often they'll give it to you in a footnote, either the first footnote or the last footnote. The preference shares, and ordinary share. Have you seen this stated capital? This very figure 8880. They will give you the breakdown in the footnote, usually the last or the first footnote. So you go there, they say that preference dividend is 2 years in arrears. We've seen that. The stated capital is made up of the following: 5 ordinary shares, 5,730. Preference share 3,150. So 5,730. Great. So you go and then bring them in. Ordinary share, your position before is 5,730. Preference share is 3,150. That gives us the 880. 20% debenture, the position was 3,200. Bank overdraft is 2,100. All this is coming from the financial position. Okay. Account payable is 3,200. Accrue at 600. But the dividend in arrears, we have to go and do the calculation ourselves. So let's go and do that calculation. The dividend in arrears. They say that the preference dividends are 2 years in arrears. So calculate for 1 year and multiply it by what? 2. So 1 year will be 18% of 3,150. Then you multiply this answer by 2. That is the preference dividend. It's in arrears for 2 years. They'll give you percentage. Just pick that percentage, multiply it by the preference share value. Whatever answer you get, multiply by 2 because in 2 years arrears. That is all. So 18% times 3150 and times 2 years. That's all. So let's do that calculation here and let's see. So 18% times 3150 times 2. That'll give us, wait. So you get 1134. So 1134 is the final answer. So you come here and you put it in 1134. That is the preference dividend in arrears. Now let's go to liquidation. So all these people in event of liquidation, how much are we giving them? Ordinary shares, how much are they receiving? But they receive nothing. We give them nothing. Preference shareholders, they also receive nothing. 20% debenture. Try paper jam. Paper jam. This one is 3,800 though, not 3,200. 20% debenture, we give them all their money. Where is it? Here's the 3,800. So these figures are coming from the liquidation. Whatever you are giving them, come and then write it here. Bank overdraft, how much are you giving them? They had their money intact. Account payable, try for them, we give them 3064. So account payable, we give them 3064 instead of their 3,200. Accruals, we give them 574 instead of their what? Instead of their 600. Preferred dividend, in fact, their name did not even appear on the list. Their name did not even appear to even receive 1 Ghana cedi. So nothing was given to them. So that is all. Now let's get the loss per liquidation. It's so smart. It's so simple. Your position before minus your position after will give you your stand or the loss. So after the Reddit, you had 0, right? So you are losing everything. 5730. So is this minus this? So let's say here is A, here is B. So here is A minus B. Perfect. This minus this, that will give us 3150. So that means preference shareholders, they are losing everything. 20% debenture, they are not losing even 1 cedi, 1 peso of their debts. Bank overdrafts. Bank overdrafts, they are not losing, oh. Empty, they are not losing. Account payable, child, they are losing. They are losing. How much are they losing? The value is 3,200, but you are giving them 3,064. So account payable, how much are they losing? And then, so it means that 3,200 minus 3,064 will give us 136. So the account payable, if you should liquidate right now, they will lose 136 of their investment. Wow, that's so fantastic. Then accruals. Accruals 600 and 574. So that means this minus this, that will give us 26. If you should liquidate right now, they will lose 26 of their investment. Preference dividend in arrears. In fact, they are not losing. No, they are losing everything. They are not getting anything. So 1134. We are done. Put all this together. Put all this together to give us the total loss per liquidation. So all right, find somewhere and then I'll write it here. Total loss per liquidation. Total loss, the overall loss. So let's see the overall figure. So sum all the losses together. The total loss per liquidation will be great. So 10,176. 10,176. Perfect. So that's the end of the first one. Let's see if we have fully answered the question that follows. Let's see if we have fully answered the question. Let's go to the requirements. Again, anytime you're solving question, just be visiting the requirement and see whether you're on track. You say advise the preference and ordinary shareholders of their positions in case of liquidation. So tell us whether they are losing or they are not losing. If you just do the calculation, if not conclude though, if you leave it like this, you've not solved the question. We are asking you that what will be their position? Okay, so you write ordinary shareholders and they will lose all their investment. Preference shareholders, they will lose all their investment. Ordinary shareholders, they are losing everything. That's the interpretation. They can also ask you, advise the bank and the bank overdraft, their position. Okay, the bank, they are not losing anything. Bank overdraft, they are not also losing anything. That is all. Great. Okay, so that is it. I like the analysis. Yes. How much are they losing? So that I use that one to write. So if upon liquidation, the bank overdraft or the 20% debenture, they are not losing anything. And by mistake, you tell them that they should even lose one cedi, they will not agree. They will force liquidation because upon liquidation, when the company shuts down, they will get their money intact. And you are telling them to lose even one peso, they will not agree. So that's the essence. Now let's continue the game. Let's continue the game. We are done with the step one. We go to step two, determination of the maximum loss. Determination of the maximum loss. That is the step two. Great. Perfect. So this one is 5730, not 50. It's 5730 here. Okay. We will continue again in the next lecture. So this is how far the good Lord will bring us. Great. Thank you very much and kindly subscribe if you have not done that. Great.